Welcome back, my dear students. This is lecture one, the second video. It's about the in managerial accounting. It is regarding the income statement because we said we have the balance sheet and we have the income statement. So this is regarding the income statement. Let's go and see what we have here today about the income statement. So as you see, my dears, that the income statement, it's the situation, financial situation of any um, company, a financial situation, the end, what I have a net income or no. So let me go to the components first, then I will get back to the theoretical part. But let's go to the components. So this is a very simple figure of the income statement. The income statement is showed the net income. The purpose of the income statement, like you see at the end here, the net income is shown up. So the net income, we are looking for this number. So simply, it is revenues, those are revenues, minus all the expenses and losses. Again, the purpose of the statement of income or the income statement, the purpose of the income statement, because those two, the balance sheet and the income statements, is very crucial, important in our managerial accounting curriculum. So we have to go through it very well and understand it very well because it will face us many times in our curriculum. So I must know the basis. I know some of you guys know it and others not. So let's go for talking instead of talking too much. So now we have the revenues minus the expenses. So all those are revenues and all those are expenses. So at the end, it will give me the net income. That's why when I say what is the net income statement, we say like this. We say a net income statement is one of the three important financial statements used for reporting a financial performance. Of course, it shows the financial performance because it shows me the net income for a specific period, with the other two key statements being balance sheet and the statement of cash flow. We don't study here the statement of cash flow. We will study only the balance sheet and the financial statement or the income statement. It's also known, there is another name for it. They call it profit and loss, like you see here. Profit and loss statement. So it's having two names, income statement or profit and loss statement. Usually for 1 year, but some companies, they do it periodically to know how to stand out on their financial situation. Also, I just want to say that the purpose of this income statement is to show the financial situation. Why? Because I will depend on this statement in making managerial decisions. All the statements which we have in our curriculum is not for its sake. It is not because I want to make deductions and no, it is to give the decision maker info and data that help him in making decisions. But it's not for the sake of its own self, not because I want to say, hey, I'm just counting here, adding and subtracting. No, it is because those all statements will help the decision maker to make his decisions. So let's start with the sales and revenues. Let's talk about the revenues part now. Revenues part. Start with the sales revenues. Interest revenues means money out for you. You are investing money, and this money made interest. Plus gain on sales and assets. You sold the assets, and you have now gained the money of the assets. So all this 100,000 plus 5,000 plus 3,000, this all 108,000. So those are the revenues. We have the sales, we have the interest revenues, we have the gains. Then also we have the expenses. Now we will deduct the expenses. The expenses are 75,000, 5,000, 3,500, 2,500. This, the first is cost of goods sold. and we will know how we will get the cost of goods sold very soon. 75,000 plus commission expenses 5,000 plus office supplies 3,500 plus office equipment expenses 2,500 plus advertising expenses 2,000 plus interest expenses 500. Okay, loss from suits. Lawsuits means they pay for lawyers $1,500. This is losses. 1,500. Then all your expenses, when you count all this together, 75 plus 5 plus 3 plus 2 plus 2 plus $500 plus 1,500, all this comes to $90,000. So you have your revenues 108,000 and you have your expenses 90,000. So what? So it's very easy. You have in your right pocket earnings 108,000 and you have to pay, or you paid expenses 90,000. Then what is the balance? What is the rest? The rest is the net income will be 108,000 minus 90,000. Then it will be 18,000. Here I will write it down. 108,000 minus 90,000. Then this will give me 18,000. And this is, of course, the end of this example. And we will do an example with ourselves, a train with ourselves. We train with ourselves an example. Then we will see you on the next lecture, on the next class. Let's go for another example for the income statement. Let's see. So the example is telling me, giving the following data, 190,000 sales revenues, 15,000 interest revenues, 10,000 advertising expenses, 15,000 marketing expenses, 60,000 cost of goods sold. And what I need is draw the income statement. You will do the income statement exactly like this in this figure, in report figure, and calculate the income, net income, and calculate the net income as well. So please do that, and thank you so much. I will be waiting, then we'll discuss the results. Thank you. Thank you.